Welcome everybody to the 40 Finance channel. My name's Jeff Beers, and today I'll be taking a look at McDonald's stock to determine, do I think McDonald's stock is a buy in the year 2020? We're in the midst of all the big health concerns. McDonald's has been an American staple, international staple for a long time, but is it worth a buy in 2020? Let's jump in. And it's always important to call out that I make these stock analysis videos for entertainment purposes only. Please get the advice of a financial professional if you are interested in investing. But on that note, if you do like stock analysis, investment ideas, and personal finance videos, then please subscribe to the 40 Finance channel. Thank you to everyone who's signed up so far. All right, well, we're in the tail end of March here in 2020, and obviously right now the world is a crazy place, and McDonald's, like so many other stocks, is facing severe challenges to just operate their business. They are in a good shape from the standpoint of, at least right now, their drive-through windows are open across the USA and most international locations. So they are bringing in money. But with the stock market always looking ahead, we know that investors are concerned about companies like McDonald's. Can they survive the long run with limited revenues? Can they still make a profit in this environment with just the drive-thrus being open? And with that, we're seeing McDonald's come down from a price standpoint to some of the lowest points it has been over the past 3 years. All right, checking out the McDonald's stock as it stands here today. Current price is at $148.49. I looked back a little ways off the top of my head. This is about the same price that McDonald's was in February of 2017. You basically have erased, the better part of 3 years of stock price appreciation. So from an investor standpoint, this is definitely an intriguing time. Current PE ratio right now is 1884. The forward PE, which I put a question mark on forward PE, it's currently showing as 23. But the problem here right now with forward PEs in this, healthcare that we're in is that they just can't be accurate. There's no way that they're accurate. No one knows what revenue projections are going to be. So forward PE is a little bit of a grain of salt. I would figure that the current forward PE that we're showing of 23 was likely assigned, somewhere back in January, and obviously the world has changed since then. McDonald's reached its peak in 2020 of $217, so the current price today is minus 31%. And you got a 52-week range of 124 to 221, so an almost $100 range in there. Not super surprising given what we know. And the dividend right now is 3.34%. And a couple bright spots for a company like McDonald's to call up to investors who maybe are not familiar. McDonald's does quite a bit of franchising to large groups, selling the rights to, dozens of McDonald's at a time. So they are in essentially a franchise model. They also own a significant amount of real estate from their times when they started up in the 50s and whatnot. So they have some different games to play outside of just the standard, sell a cheeseburger, make a dime kind of thing. It's also important to point out how big they are, right? So just being in an international company like this, the closest really competitor to this whole thing, you'd have to start looking at something like Starbucks if you want to be in the same wheelhouse as McDonald's. Most of the other fast food restaurants that you can think of are not even in the stratosphere of McDonald's in terms of how many locations, general location profitability, earnings growth, all those things. McDonald's is far and away number one in the fast food business. All right, looking at some valuation metrics over the last several quarters. And what we can see here on the chart, at least from a trailing PE perspective, and knowing that the number is in and around 18 today, you're definitely seeing the cheapest PE with McDonald's that you've seen all the way back to September of 2018. It's significantly cheaper than even back then when they were at 24.53. From a forward PE perspective, even though that number is a little murky, if we took I'll call it the January forward PE of 23, that really comes in also relatively cheap compared to the past several quarters. There's been numerous instances of 23. The fact that McDonald's valuation hadn't really like exploded from a PE standpoint is really good news. It held stable throughout even all the revenue growth and the good news that they had when times were better. And so picking it up today in and around a PE of 18 definitely warrants consideration. Now, normally I like to look at price to book ratio when I'm doing these analysis videos. That is not available for McDonald's right now. It was actually running in the negative, which was confusing to me, so I had to do a little bit of research. And basically, when you have a negative price to book, there's a lot of influencing factors. McDonald's had a relatively large share buyback program that some of the research I read suggested that could have been influential in having a negative price to book. There's also obviously some concerns that, the asset value of McDonald's would not be what we think it is. I don't really think that holds true in this situation for McDonald's. I think it has more to do with the stock buybacks from what I read. However, just know that if price to book is a fundamental number for you before you invest, you're going to have to dig around a little bit to get that, and you may even have to do your own basic calculations. All right, so we know McDonald's on an average day is a pretty good company, pretty good growth targets. Generally speaking, they've stayed out of the news in terms of food safety scares like Chipotle had. You have not seen a lot in the labor battles. McDonald's has generally kept in line with the labor expectations. You've had relatively good growth over the past 5 to 7 years, especially when they started to double down on things like coffee products and, somewhat healthier options. So I feel like that they're managed very, very well. The only catch here for 2020, of course, is that revenues and I would assume profits are about to fall off the cliff effective, at least the end of Q1, looks like Q2. So does this make sense right now? And I dug into the investor relations portion of the website just to see what is McDonald's response to all the questions. And they did a press release on March 16th of 2020, and they basically just gave an update. We're working with franchises around the world to evaluate operational feasibility and support financial liquidity, example, rent deferrals, during this period of uncertainty. So that right there says, hey, they're playing for the long-term win, which is good. They're trying to keep their franchises afloat during these times of uncertainty. So if they have to sort of massage rent payments and royalty payments for locations that have proven to succeed in the past, it sounds like they're doing that. They're not worried right now of what the cost of that exercise would be, right? They're just trying to keep people open and get through this storm. And then at the bottom, at this time, neither the duration nor scope of the disruption can be predicted. Therefore, the negative financial impact to our results cannot be reasonably estimated. And I think that this is a pretty good call. They're coming out and answering like, hey, we know you want to know what's going on with store operations and profits. We can't even estimate it right now. There is no inclination that, at least in America, restaurant dining is going to come back to the way it was 6 months ago anytime soon. If I had to pick, I would say it's going to be closer to May 1. I think you're certainly past Easter with the way things are going. But either way, very, very hard to predict. And then even outside of, operational disruption, there's still these caveats of the way the U.S. government is trying to put together, not really bailouts, but opportunities for businesses to borrow at cheaper prices, extend debt loads, things like that, which aren't necessarily the greatest things you want to see, but McDonald's is big enough that they can leverage these things to make it through tougher times for longer amounts of time than smaller companies. So the bottom line as an investor is you do have to flip a coin here, right? Because the longer McDonald's is closed, at least in the way we know it, the more it's going to affect profits. And as long as you believe that they will continue to be in business, it just means the longer it will take for them to recover. All right, looking at the TipRanks Analyst dashboard right here, I double checked these numbers. I was a little surprised myself, but over the past 10 or 14 days, you've had numerous analysts come in and update their McDonald's projections. And out of the best performing analysts, we still have 8 buys and 1 hold with a median price target in the next 12 months of $231. A lot of the top analysts are essentially coming in and saying, hey, times are tough now. Over the next 12 months, we're targeting McDonald's at $231. So definitely a pretty big opportunity there. Keep in mind that we were at $217 on the 2020 highs, but coming down here to $150 and seeing TipRank analysts at $231, that's definitely a good sign. All right, so the bottom line for me from a McDonald's perspective is I think that it's a solid recession-proof stock. This is one of the oddest recessions that we're ever going to see, just the nature of people being sort of locked in their homes. But if the smoke does clear and we know that, jobless claims are going to go up, McDonald's price point is certainly in a great place from a menu perspective for many people who are still pinching pennies and trying to get, maybe get a new job or get back online with the business. McDonald's does offer opportunities to return to normal, so to speak, for folks that have really gotten hit hard with the coronavirus. I guess my biggest caution point here, though, is that the health news around the world right now, here near the end of March, it could get worse. And that's the only reason right now that I wouldn't give McDonald's like the 100% buy signal, because I can't tell for sure right now how bad the news is going to get. And obviously neither can the experts, right? On the bright side, if things do get worse, I do like what McDonald's is doing to preserve their business and continue to be aggressive, turning the dials and trying to adjust. They've cut their share buyback program. They're looking into ways to help franchises keep their financing, and I wouldn't be surprised if we have some dividend cuts in the short term coming up. So they are actively trying to preserve the equity of their business, which is encouraging, as opposed to just, sitting around and watching business drop. So when I put all those things together, at least for me personally, my opinion is McDonald's absolutely is a buy, with the caveat of here at the end of March, I would definitely be watching the news more closely over the next 30 to 45 days. I personally like to see it in a target price range of 130. That gets your PE down to 16. It's not a clear winner that will be the bottom. You're just going to have to keep your pulse on how these restaurants are performing under these distressed conditions, right? I think there's more room to run down. McDonald's is one of those long-term stocks, though. You don't need to get it necessarily at the bottom, certainly to make money over the long term. But if you have not started a position yet, then I would definitely wait for the 130s. I think it's going to happen, not because McDonald's is a bad company, but I think the bad news continues to come in over the next couple weeks. And then at 130, I think it's a great starting point. And just know that unlike some of the tech giants giants. Let's just say Amazon as an easy example. I think McDonald's recovery from this whole escapade is 2+ years away. So I think you'll get a stock that bounces back to some degree once things go back to normal. But I think the true win for investors on a company like McDonald's is getting back to a day when they're paying down debts, when they're releasing dividends, when all stores are open. I think you have to sit in this one with the expectation that you're going to hold it for 2, 3, 5 years to capitalize on the full advantage of it buying at a discount. This is not a quick money winner. This is one, though, that has excellent prospects to bring you profits. I would just expect to hold 3 to 5 years to really make the most out of the opportunity. But do tread with caution here over the next 30 to 60 days. Get a feel for, how much further is it going to go down, and then be prepared to hold it for a while to get all your money back. Hope you guys enjoyed this. Please give me a like and subscribe if you like these stock market analysis. I'll see you on the next video.